Hi, everyone, and welcome to Innovation Insider. Today's guest is Anthony Justice, or AJ, as most of us know him. AJ is one of Australia's most respected insurance and financial services leaders, with a career that spanned the C-suite, the boardroom, and now the founder's seat. He's led some of the country's biggest insurance and banking brands, including IAG's Australian Consumer Division and Uno Home Loans, where he built a reputation for challenging convention and turning strategy into action. Today, through his firm, 11/8, AJ helps businesses sharpen their thinking and unlock innovation that actually delivers results. And in parallel, through Vin Justice, he's found a creative outlet that combines his love of wine with his passion for business and storytelling. In this conversation, we explore what innovation really looks like in the C-suite, what it takes to get ideas moving inside large organizations, and where AJ sees the future of insurance heading. Welcome, AJ.
Thanks, David. Nice to see you.
Nice to see you too. I'm very excited to see what we're going to dive into over the next little while. I'll kick off with I guess a story that'll lead into a question. You may or may not recall, this is a number of years ago when you were leading some of Australia's largest insurance brands, NRMA and CGU most notably. And I was a punter who had an idea that we were pursuing a new innovation, a new proposition that was, I guess, designed to live our purpose at the time, which was around making your world a safer place. And this was the first sort of, I would say, low intimate engagement that I'd had with you, and there was a couple of other leaders in the room. Essentially, I was pitching for support and some funding. And I walked out of the room knowing that you had my back, and I thought, this is great. This is exactly what I'd hoped. Got the outcome we wanted. We got the support. We got the funding to sort of take things to the next step. And from that moment on, I was like, I knew that you were someone who cared about innovation and were passionate about what the opportunities that can come from it. I guess my question is, as a long-time supporter of innovation, from your perspective, how important is innovation in the C-suite, and how often is it genuinely discussed at the top table?
Yeah, great question. Thanks, David. Thanks for the story. Look, I think first of all, I think innovation is incredibly important. I think organisations that don't innovate, and there's plenty of case studies through history, end up in not a great place and often get taken over or don't exist in several years' time. So I think first of all, first question, innovation is superbly important. I think how much discussion does it get? Well, executive and board agendas are always really busy. There's always a huge focus on current performance and risk management and strategy and all those things. And so squeezing innovation in is often quite challenging, if I'm honest. I don't think it always gets the airtime that it potentially deserves or could have, given the impact it could have. So look, I think it's very difficult for organisations that have got really packed and busy agendas to make the space. But those that do, I think, benefit from it. But I think the other thing I would say is, I think too many organisations these days see innovation as sort of a separate business unit or something on the side, and they don't think of innovation as core to everything that they do. And there's innovation possibilities everywhere in an organisation and in a business. And I think just sort of creating an hour on an agenda to talk about innovation is potentially the wrong way to think about it. It's about how do you get everybody in an organization thinking about how they could make an impact by changing or improving something. And it could be very small. It doesn't have to be some great big program or investment. It could be a process that's broken that could be changed 5%, which could have a huge impact. So I think sometimes we frame innovation in a way which isn't necessarily that helpful. It sometimes it sort of gets created as this sort of big thing or a separate business, as I said before, where actually innovation for me is just about the way we all think about doing things better and differently.
Yeah, it's a really good point. Thank you for sharing. I'm just thinking perhaps then innovation isn't discussed explicitly. I mean, you're right. You're not going to have just an agenda item that's kind of innovation, how are we going kind of thing. But it is, I guess it's probably embedded through other agenda items and discussion points in terms of new opportunities, new markets, but also on the other end, looking inward around productivity and how effective are we with with the resourcing and the people that we have to be able to maximise the value for our shareholders and our customers. So, I guess then, leading on to my next question, as someone who's led a number of major financial businesses, what do you believe it really takes? What are the ingredients to actually get innovation going in complex organizations?
Good question. Look, I think it's a cultural thing. I think, and innovation is everybody's responsibility. As I said before, if you set innovation up as a separate team, that's fine. That might work, but there's a risk that then absorbs everybody else in the organization from the responsibility of innovation. So I think first of all, culturally, you've got to encourage people to think about doing things differently, expect them to find ways of improving things, not just doing them the way they're done, because that's how we've always done it around here. You hear that all the time in organizations. And so you've got to give people the space and the permission to try and do things differently, to allow them to make mistakes, get things wrong. That's fine. But I think you've got to be quite demanding in the way you expect that within an organization. So just accepting the status quo or trying to do more of the same thing to get more throughput isn't always going to optimize your business over the long run. And so I think creating opportunities for everyone to innovate and to suggest different things and to allow for experimentation and allow for failure is a cultural piece, which is quite hard to do in the hurly-burly of running a business every day and having to hit your targets and manage all the complexities that go on, particularly in financial services organizations these days, which are complex and which have got a big focus on risk management and all those things. But I think if you can create the environment where people are allowed to experiment and allowed to fail, then that's sort of, I think, probably the main ingredient.
So if culture is a critical ingredient, how do you know that you've got that culture, and how do you know that you're making progress? And perhaps the second question off the back of that is, how do you measure it and know that you're heading in the right direction?
Well, maybe we'll go back to the story you told at the beginning. I think somehow if you can create an atmosphere where people feel like you've got their back, they feel like they're allowed to go and try things, they feel like they've got support, then I think you've got the kernel of that ingredient. Now you need to create feedback loops. You need to check that people feel like that. That's not always easy to work out, particularly in a leadership position. But I think making sure you're listening to ideas as they come in from all over the organization, creating processes that allow people to come up with ideas and then allow people to test those ideas, not just sort of nod and say, yeah, that's a great idea, and then do nothing about it, which often happens, right?
Yeah.
Maybe creating some funding to allow those things to happen. Organizations typically have very tight funding envelopes. They have lots of things allocated to stuff that are, they call keep the lights on or compliance and all that sort of stuff. So I think you've got to be able to allow for there to be funding for some of these things, because you can't do everything for nothing. And so I think it's about creating the environment for people to feel safe to do it, and then creating a sort of framework and the ability for people to go away and try things and innovate. And it doesn't have to be necessarily huge, large scale. I mean, big corporates often set up big, expensive innovation teams. That's fine. But it doesn't have to be that, I don't think. I think it can be quite small, quite micro, just carving out a little bit of time and money to allow people to try new things. And if you can do that and success comes from that, then I think you're onto the right thing. And then you've got to celebrate those wins, right? You've got to make sure people feel like it was worth the effort.
Yeah, absolutely. I would wholeheartedly agree. And a lot of conversations I've been having with organizations in the current environment is I guess asking exactly that, is going, okay, we've got the right people, we've got the right mindsets. It's how do we actually, but budgets are tight. It's still particularly tricky in a lot of industries. The growth is limited. So the focus is very much still on productivity and cost. So it's around how do you create that environment for within the organization so that people feel like they're still able to innovate, but perhaps think about innovation differently to the big shiny toys and the big expensive teams that you mentioned. So it's a common challenge, but again, I guess coming back to what you said around that culture, I think is critical, where making sure people feel safe and supported to be able to crack on and just try things and experiment. So, from your perspective, what should leaders be doing? And based on what you're seeing and have seen over your career, what should leaders be doing differently to lift the innovation capability of the organisations that they're leading?
I think probably the thing I see most doing what I do now is organisations generally really struggle to create space, and they often struggle to create space because they're dreadful at stopping things. So I don't know how many organisations I've been in since I've been in the consulting world where one of the obvious things that you can see from the outside looking in is that there's lots and lots of activity, and not all of it's necessarily very productive or aligned to the strategy, but often the organisation or leaders within the organisation are not able to stop things, not able to say no, or the corporate machine just keeps on rolling, and things don't stop and resource doesn't get reallocated. And I think probably that's the biggest barrier that I see, is that there is just, the machine just keeps rolling, nothing ever gets stopped. We've got to keep doing it. Some things you can't stop, right? There are genuinely projects and activities in an organisation that have to continue, but not everything. And I think a slightly more ruthless approach by management on stopping things that are not aligned to strategy, that are not necessarily adding value, would create the space that's needed to invest in innovation and other things, not just innovation. But I think that's probably the one thing that I see more and more these days is it's really hard to stop things in a large organisation, and that might be due to the organisational structure and a matrix organisation, or not clear who gets to vote on that sort of thing, or leaders that are too busy or too distracted by other major challenges in the organisation to worry about stopping some of the things. So there's lots of reasons for it, but I do think if organisations are really good at stopping things and really focused, then that's an environment where you can create the space to innovate.
Just on that, I wonder if I would say, in my experience, particularly working inside some of these client side organizations, is I do wonder if there is an element of, I'm not sure exactly how to articulate it, but there's a level of fear, and I don't know if it's fear I don't think it's necessarily fear that's driven from the top down, but there's something around leaders might have fear to say no or stop things because they think it might impact their ability to get the next job, impress the boss, save their current job, or whatever it is. I argued a number of points, and perhaps I wasn't always as political as I could have been, but sometimes if you are and you're passionate and you're trying to let your data and insights drive your decision making to stop things or pivot things or whatever it may be, quite often there can be political decisions and people sort of protecting their backs or whatever it may be, not in a sinister way, but just the way that they operate, particularly in middle management, and maybe it's to do with some of the structures and the larger the organization. I share your sentiment that it's hard to stop things because there's just so many decision makers and stakeholders potentially in the way, and if one of them is worried about what that might mean for them individually or what it might mean for their team or whatever it may be, then that can have a significant impact that has a flow-on effect across everything else, right?
You've got right to the heart of the problem, I think, Dave. So look, I mean, politics it's a fact of life in the corporate world, right? It happens. And it's driven by fear and greed. People are worried about not being relevant or losing their job or what have you, and people are incentivized and get bonuses and shares and all those things, and those things drive people's behaviors, and that creates politics in organizations, and that is often a huge driver of why activities happen or don't happen in organizations. So look, I think you just have to accept that in any organization, whether it's a corporate organization or not for profit, whatever, any sort of organization, there's going to be those politics, because we're all humans and we've all got desires and needs and wishes and dreams, and so you can't avoid that. But I think if you can try and, as a leader, try and push through that and create the right environments and take some bold steps if you can to change things for the good and create innovation and create safety for people, then you can maybe push through some of that.
Yeah, no, I think it definitely comes back to that first point you made around the environment and the culture, right? And I think it also showcases just how important leadership are to set the foundations for an innovative organization. Is without that leadership support, you're probably likely to get more and more. Well, the work that you're going to do is more and more potentially less effective, less linked to strategy. Your delivery capability, your productivity are all going to fall backwards because you just keep adding without stopping and necessarily considering if what you're focusing on is in the best interests of what you're trying to achieve. So it's really, really interesting. That sort of just thinking coming that full circle. It's certainly, as someone who's worked, I guess, closer to the customer and closer to the products and sort of a number of times, and coming up against some of that painful decision making and politics is certainly something that is very hard to navigate. But those who can crack it will certainly thrive. So then, I'd be keen to understand if you share or if you hold any unpopular opinions about innovation or leadership, either through the context of insurance or wider financial services.
Look, I think one unpopular opinion would be that I think organisations these days are driven heavily by short-term financial results, particularly listed organisations, and the requirement to hit your next quarterly numbers is overwhelming almost. And it's probably unpopular to say that, but if you want to invest for the long term and innovate and think beyond the next 3 months results, you've got to think very differently. You've got to make some different decisions. The business case is a bit different. It doesn't necessarily meet all the metrics that are required to, contribute to the next 3 months results. So I think, it's really hard in an organization that is, particularly a listed organization, that's so driven by its next set of results, to think beyond that. But I think you have to, and that's sometimes unpopular. You're going to come up against a whole bunch of barriers in the organization. People say, well, why are we spending the money on that? We should be spending it on things that are going to drive the short-term result. And look, I think that's just, I think it's a bit sad, and I think it's also probably not very good for the long-term health of organizations. If you want to survive for decades and decades and decades, you have to think in those ways that allow you to invest for the long term, build longer term capabilities, find ways of being better at things than your competitors over the long run, not just beating them in your quarterly results in 3 months' time. And I think that's not necessarily a popular opinion in boardrooms.
Yeah, no, I imagine. And that's a very good point. It resonates with, I was at a conference earlier this year, a digital healthcare conference, and someone made this great point that they were talking about, this is a link back to insurance, is they talk about investing in prevention. So insurance is about kind of whatever vertical it is, it's about kind of helping people when they're, when kind of, shit hits the fan, for lack of a better term. But insurers have this opportunity to focus on prevention, to stop some of these bad things happening. So whether it's helping people live longer, and that has a positive impact on life insurance, whether it's helping someone drive safer in their vehicle or protect their home, so that if a major event happens, that they're better protected to manage that or weather that. Or in health insurance, it's about helping people reduce their live a healthier lifestyle so that they're less likely to get chronic disease and hospitalizations, et cetera, et cetera. But the return on investment in prevention exceeds and the term that was made at the time, exceeds a profit season and exceeds a political cycle for the government as well, right? Several, right? So it's very, very difficult to justify that investment when you've got your shareholders and stakeholders looking at those short returns and going, well, we're trying to invest here for the future. Now, the returns on this may take generation. So it's very, very difficult. You've got to be very good at selling the dream. But I know it's far more than that, but to sort of build that trust and patience with shareholders. I haven't seen it done perfectly in certainly in an insurance context in any vertical or any organization. But that's I guess it's a very long way of saying I agree with what you're saying. But it also does expand to, if you think about governments, right? It's around political cycles are the same deal, even at 3 or 4 years.
Absolutely.
So how do you invest in making your nation healthier or safer or whatever it is, where it's not necessarily going to win you votes at the next election because you haven't been able to prove a return in whatever measure it is on the money that you've outlaid?
Exactly the same problem, right? Yeah. And it happens in all sorts of walks of life. It is a difficult challenge to overcome, but I think if you want to create a long-term sustainable organization, you have to find a way of creating some patient capital, some capacity in your organization to invest for that longer term.
Yeah. Have you? I'm going to put you on the spot here. Have you seen any global? I'll open it to global. Any particular companies that you think are market leaders in this sort of long-term? And I guess in history there are some great examples. Where we've talked about organizations that set big, hairy, audacious goals and these kind of things that can sort of establish themselves for success. But I don't know what it is that's unique about those organizations. But I will put you on the spot if you've got any examples.
Yeah, I'll give you. I started my career in the oil industry, and the oil industry, by nature of going and finding oil fields and the amount of time and money it takes to development and the amount of time it takes to get your money back on those investments. The investment time horizons are 20, 30, 40 years. So industries like that have to think very differently. They take risk in a very different way. Often those companies are very large scale and therefore, they've got short-term performance to sort of substitute that, the longer term investment that they need to make. But I definitely noticed when I moved into financial services sort of 10, 15 years into my career, a completely different investment horizon, a completely different culture around that. So it's really interesting to contrast between industries. I think the other point I'd make, and I can't think of a good example off the top of my head, but I think I used the term patient capital before. I think patient capital is less often found now in listed organizations and more often found in privately held organizations, where it's probably easier for the owners of the organization to think longer term and make those choices because they're not answering to the wide range of shareholders that they've got. So I think there's a couple of things there around sort of the type of industry and the way a company is owned that maybe are some of the clues as to how you can overcome those sorts of things. But for most of us working in big corporates which are listed on stock exchanges, that isn't the case. It's the reality is you have to find a way of navigating through the short-term pressures to be able to invest for the long term.
That's really interesting. Just thinking about those ownership structures, is perhaps that's somewhat of a unique advantage. If you think about the founder, again, linking it back to insurance, to the foundations of insurance, which were kind of mutual based. It was a collective of people who were pooling money to sort of pay risk if something happened to someone in that collective. Perhaps those funds that are still owned by their members have an advantage there to be able to actually invest a little bit in long term, because their owners are their owners are also their customers, their members. So I do wonder, and I know we're sort of, I think in general insurance, there's probably, I can't think of many mutual insurers. In health insurance, there are a number. Life insurance, I'm not quite sure, but Perhaps that's an opportunity or a unique advantage that they do have over those bigger sort of listed or owned by people who aren't necessarily don't have as much sort of skin in the game or influence.
Yeah, I think that's right. I think the mutuals and in the general insurance sector, the motoring clubs have been a good historical example of that organisational structure, and that does create a different dynamic and potentially the opportunity to think of it differently and invest a bit differently, for sure.
Yeah. Okay. So we will just stay on the line of insurance. Probably focusing primarily on general insurance. I know that's something you've certainly got intimate knowledge about. In Australia, in particular, organic growth is notoriously tough for market leaders. So we have seen over time market leaders like IAG, Suncorp, Allianz, etc., really find it tough to find organic growth. Why is that? Do you believe it's so hard to find that top line growth if you're a market leader, particularly in the and I'll say the Australian context, but perhaps you have insights that expand our geography as well.
Yeah, look, I mean, growth is hard, and growth is hard in a market that isn't necessarily growing itself that much. So everyone's competing for the same customers, and that's a tough game. So it is difficult. You've got to differentiate. You've got to be really good at what you do. You've got to be efficient at what you do in order to be able to be competitive. And so getting all those ingredients lined up and making sure everything's working really well is probably the secret to making sure you're able to grow. And even then, everybody else is trying to do the same thing. It's about whether or not you can convince a consumer that you're better than the next organization or the next offer. And so it's a hard and relentless game, growth. I think it's not easy. And look, I think in insurance, particularly as you see sort of pricing cycles come off, which we're seeing in the general insurance sector now, I think a lot of organizations are really trying to focus hard on how do they get volume growth again, and that's a long, hard game.
Yeah. So I guess maybe there's a question here around if history is repeating itself, where the major players, the bigger players, are finding it really hard to get that organic growth. So I'm simplifying this and dumbing it down, but the simplest way then is to buy growth where you can't get that organic growth. We've seen that happen in the last couple of years. We've seen both IAG and Allianz make some plays on some of the smaller players, the motoring club insurers. Is that just a cycle we would expect to continue to see in insurance? Is perhaps less general insurers, perhaps brands remain, but it's still more brands, and I think there's over 60 brands to choose from across the Australian general insurance landscape. No shortage of brands, but perhaps all centrally underwritten by a small number of dominant players. Is that something we're likely to continue, or you would expect for us to see across the Australian market?
Oh, look, it certainly seems that we see cycles of consolidation, right? So I don't think we should be particularly surprised by that. I think that happens. I think there's a few other drivers in there at the moment. I think climate change and increasing perils risk and what have you are definitely focusing the minds of smaller insurers. And so I think that's probably one of the drivers here, is that actually it's important that insurance companies are sustainable and they've got regulatory obligations to be so. I think there's definitely an advantage in scale in insurance. It's particularly with climate change and perils risk and what have you starting to bite. We've seen a few nasty around the world, really big events, and if we believe that climate change is a real thing, and I certainly do, then we should expect that to become more frequent and more severe over time, and therefore the importance of scale probably becomes even more into focus over time. So look, I think when you zoom out, I mean, yeah, there's things happening in the market all the time, but when you zoom out and you look at the reasons why that's happening, I think to some extent it's not it's not necessarily driven by big players wanting to buy small players. It's potentially driven by smaller players needing to make sure that they are, they're protected against some of those macro risks which we're starting to see globally in the insurance sector. So I think maybe there's sort of two sides to that coin.
Yeah, it's a really good point, and I think perhaps it does link in. You sort of touched on regulation there, and as far as I understand it, well, across most insurance verticals, highly regulated industries, increasingly regulated industries. But thinking about one of the drivers of that is that there is those, in general insurance in particular, you've got greater risks around some mega forces that are influencing that. So your requirements to hold capital, to report, and all of those things become more scrutinized. So you've kind of got two sides. You've got on the sort of the claim side, you've got exposed risk or increased risk because there's more and more intense events happening.
Yep.
But from an operational side, you've also got increasing a disproportionate regulatory burden as a percentage of your cost base, right, of your labor cost, is going to be higher because your reporting requirements and your regulatory requirements are the same as the players who are 10, 20 times the size of you.
Exactly right. And so that does point to scale being more and more important over time. I think if you're a small player and you've got to still do all that regulatory reporting and risk management and all those things, which are absolutely critically important to general insurers, as a proportion of your cost base, that becomes difficult, and therefore it's harder to compete and so on. So look, I think you have to sort of zoom out and look at some of these macro forces as really the drivers of some of the changes that we're seeing in the market.
Yeah, I'm just in my head, my mind's going overdrive now, thinking about those same threats and forces that impact other verticals. I think about health and life, and workers' comp is you've got chronic disease, mental health, aging populations. Like these things are the climate change or the natural catastrophes of general insurance, right, that are influencing, that will undoubtedly have those knock-on effects. I know they certainly do from a regulatory perspective, increasing medical costs, all these kind of things that are naturally going to kind of shape the market and the context of that market and who the players are and what role they're playing. So looking ahead around the future of insurance, we've sort of talked about what are some of those drivers in general insurance, obviously climate change being a big one. Outside of what is who do you think is driving the future of insurance? And I'll talk about that not necessarily on an individual company level, but what are the types of players? There's obviously a lot of stakeholders. There's a lot of players in the supply chain of insurance. But what do you think is sort of going to drive the most change beyond some of those external forces?
Yeah, look, I think let's start with the external forces. I think it's things like climate change. Affordability is another really big one in general insurance. These are some of the sort of the big challenges that the industry is facing into. And I think it's going to be a combination of stakeholders that drive this change. Obviously, governments and regulators have a role to play. We've talked a little bit about that already, and I think to a greater or lesser extent they will do that on different topics. Depending on the government of the day and how much they believe in climate change, we might see various different approaches to that. Affordability particularly in Australia, is a really interesting one, given the geographic diversity and the pockets of the country where there's super high risk and therefore super high premiums in general insurance. I don't think. Yeah,
as far as I'm aware, I think at last count, I think the Insurance Council of Australia sort of estimated the protection gap, which is that sort of uninsured or underinsured, was up around a third.
It's big and it's getting bigger, right? So I think it's a very real problem, and I don't think as an industry we've worked out how to solve that by any stretch of the imagination. I mean, there's some things happening, but I think we've still got a long way to go to work out what to do about that. And I think let's just take that as an example, affordability, and link it back to the theme of this discussion around innovation. I don't see that much innovation happening in the affordability space, and I think there's an opportunity for a lot more. Your question was, where does that come from? I wish I knew the answer. I think there's some interesting challenges here, right? So I'm not sure it's necessarily in the interests of the large incumbents to innovate in this. It's hard for small startup organizations to innovate and break into that space. So it's not immediately obvious, who it is that's going to be that's going to solve these problems. Maybe it's somebody completely left field that we haven't thought about yet, or maybe it's who's got the power in these things these days. Who's got the customers is the question I like to ask, and who's got the customers these days? Well, big tech companies, Amazon, Google, they've got plenty of eyeballs, plenty of customers. Locally, big retailers have got large constituencies. So I think about this quite a lot. I wonder where the change is going to come from and what's going to drive it, and I don't have the answer. But it's probably not where we're expecting it to. In 10 years' time, we might be talking about an organisation that we haven't even heard of sitting here today that's had a major impact and changed the game. A bit like, I don't know, let's take Tesla in the EV space, right? So maybe something will change and come left field and change the game. I think it sort of has to, because I think the status quo isn't going to work out well for consumers in the end, and short of sort of very firm regulations to fix that, which probably won't be popular in the private sector. I think we've got to find some way of innovating our way around some of these really big problems for the industry over the next couple of decades. But it's not immediately obvious. I don't have the answer.
No, I agree with this. I remember doing some work for a client a little while ago on sort of having a look at the general insurance industry, and they sort of asked that same question, and I probably came up with a very similar answer. I pretty much sort of said, look, it doesn't look like it's going to be the carriers, because they're just, I guess some of the challenges that we've talked about is that they're having enough trouble trying to find that top line growth and just keep the machine moving. It's very hard to initiate that change. So perhaps it's going to be on the distributor side, perhaps it's going to be insurtech, but the insurtech landscape in Australia is relatively small. So perhaps it is going to be a consumer-led business, or like you say, someone who's got the customers, or someone we've never heard of. Perhaps it'll be who knows? Anyway, interesting space to watch. So my final question is around something that excites you. So would love to hear an innovation or an organization that sort of exists right now, or is in the psyche around what's exciting you right now.
I love really simple innovation. So I think we often spend a lot of time trying to think about really clever stuff, and ultimately it's often the really simple stuff that has a big impact. And I'll give you an example I came across just yesterday. Actually, I think it was just on LinkedIn or something. I was looking at an organization in the sustainability space that had done something really simple. They created basically like a filtering sock that you put on the end of a storm drain, and obviously when it rains, we get big storms here, it washes all the rubbish off the streets and straight into the ocean. And they just created this sock that you put over the end of a storm drain to catch all the rubbish before it ends up in the ocean. And you go, that's such a simple idea. It's low cost, it's highly replicable. It could have a really big impact on keeping a lot of plastic and rubbish out of our oceans. And it just made me think, there's just got to be so many more good, simple, inexpensive ideas out there. They don't require amazing technology. They just require people to reframe a problem, come up with a solution, back themselves to get it to market. And that's the innovation that really excites me, actually, because we could all probably come up with one of those, right? If we put our mind to it. And so I think innovation's often staring us in the face. And it doesn't have to be created in tech labs or in rooms with lots of post-it notes. It can be just people finding simple solutions to problems that need solving. And so that was one that really captured my attention this week, just because of its simplicity, and because, look, I think sustainability, the innovations that excite me are around things like sustainability, which are going to prolong the life of our planet. And I think we genuinely need to be thinking about how we're all contributing to solving that problem. So that would be one. The other innovation that excites me is anything that removes friction. And we have a lot of friction in our lives, and admin and bureaucracy and paperwork and, you know, all those things I find, you know, that we all find, you know, eat up our time. So I think, yeah, the two things that I like to see are things that remove friction and things that are sort of really genuinely making a difference from a sustainability point of view. That's the stuff that excites me.
Nice one. I just got thinking about that drain sock. I was trying to work out in my head how you would imagine, like, that someone has that idea in a large, complex organization, and just how bloody hard it could be to even just get a proof of concept up. Whereas a startup, or I'm not sure the organization who was leading this thing, could literally just, you know, it could be out the front of their house, is just go and put a sock in a drain. Right. A proof of concept, right? Rather than go through all these approvals and processes and stakeholder endorsements, all these things, you know. For
I want to see the risk management plan. I want to see all that stuff, right? So I mean, innovation that you can experiment on quickly and easily, and, you know, without taking too much risk. But I think we've talked about a lot of that through the last few minutes. But I do think it's a good call out that can you just go and give it a go, just try it. It is a really important part of being able to innovate. What's the minimum viable product, to use the technical terms, right? But ultimately, it's just go and have a go, see if you can make it work.
Yeah, exactly. No, I like that. That's a really great example. Thank you. So I'll close things out with, I guess, handing you the mic to talk about yourself and things that you're working on. I know you've got your fingers in a lot of pies, and sort of enjoying your post, I'll say, client-side corporate life, or at least for now. But love to know a little bit about what you're doing and what's kind of keeping you excited and busy.
Yeah, thanks, David. So, I mean, I'll talk about two things. One, I guess my day job. So there's three of us that run 11-8, and we do most of our work in the insurance sector, but there's some work outside of that, and we're all interested in strategy and innovation, and, you know, we've got corporate careers behind us, and we love going out and working with organizations to help them solve problems and, you know, put good strategies in place and think about how they're going to tackle innovation. And so I do that during the day. But one of the great things that I've got in my life now is a bit of flexibility. And so I spend the rest of my time pursuing my passion, which is wine. So I spent the last couple of years doing a diploma in wine, which has been really good, and learned lots and written lots of exams and done tasting exams and all sorts of stuff. And I've just started applying that. So I've kind of got myself a little job doing a couple of shifts a week as a sommelier, which is great fun. So when I hung my boots up yesterday afternoon, I raced into the city and went and served wine for people for a few hours, which is kind of more of a hobby than a job for me. And I'm doing a bit of consulting in the wine space as well with a little business I'm setting up called Vin Justice. So yeah, that's what I'm up to.
Fantastic. And the easiest way, if people want to get your wine recommendations or your advice on how to run strategy or innovation in a complex insurance or financial services business or otherwise, what's the easiest way to get in touch?
Just find me. You'll find me on LinkedIn. Just drop me a note on LinkedIn. I'll reply.
Wonderful. Well, AJ, thank you very much. Your insights today have been incredible. I've just sort of written down a number of things, probably some things that really, I guess, cut through and are resonating with me is particularly around the importance of culture and leading that culture from the top down to make sure innovation can sort of thrive in an organization, but not necessarily isolating your innovation to one team, is that innovation is everyone's responsibility. And another one that really stuck was this idea of a short-termism as a bit of a barrier, and something that we can hopefully help solve for a lot of organizations, to think about how to get them thinking and investing for the long term. But look, Ben, great to have you on. Thank you very much, and look forward to catching you again soon.
Thanks for having me, Dave. Enjoyed the conversation.